with blue chips, but mid caps and small caps specifically outperform.
Market regulator SEBI introduces a new product to bridge the MF-PMS gap, eases rules for investment advisors, investor nominations and debt issuances, allows market trades using UPI, gives mutual funds a light option, but widens the definition of connected persons in insider trading, a concern for many.
The Reserve Bank of India has spotted deficiencies in adherence to prudential norms and in business practices of several gold loan providers. The regulator has given lenders 3 months to set things in order. Analysts see limited impact for large gold financiers. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we get you everything you need as you look forward to the next day, which is only the day after tomorrow. I'm Prashant, with me, my colleague Reema. Reema, hi.
Hi, what a smile when you said that, right? We'll see you straight on Thursday morning, but we're with you for the next 20 minutes with all the big news, key developments in Dalal Street, top corporate voices and the events to track ahead. But a very quiet, slow sort of a day, right, today?
I mean, 1.5 point change on the Nifty or something like that, right? By 3:30, adjusted maybe a little different, but nothing at all. And we were expecting a quiet day, holiday tomorrow. That, of course, playing on the minds of many. Also, we reported right in the morning that F&O sort of paper or final rules in terms of what SEBI wants to do to curb the amount of trading in the F&O segment may be out in the next, actually maybe out very soon. So we'll see. Maybe that also kind of, kept people a little bit at the margin. But I think the holidays, of course, also at work. Overnight handover was nothing at all. Banks were quiet. The Nifty Bank was absolutely quiet as well. No change. Small cap index did better, 0.75%. The IT services index did even better with about 1.25% gain. Lots and lots of action in small caps. Long list, Paytm, PB Fintech, K Fintech, and so on and so forth. So there was no lack of volume-led gainers in the broader market, really. But a bit of a break as far as large cap action is concerned. Reema.
Well, the mid and small cap universe looked so much better. The small cap index ending with a gain of nearly about 3/4 of a percentage point higher. Advanced decline ratio well in favor of the stocks advancing. And lots of pockets which did very well today. So chemical, specialty chemicals, agrochemical names, whether it's Navin Fluorine, Tata Chemicals had a 4 to 5% rally. Coromandel International was higher in trade. Brokerage and exchange-related names, so BSC, IFL, MC, IFL Securities we're talking about, Angel One, these stocks too ended up higher. In terms of just big sector moves, the Nifty IT index ends with a gain of more than 1%. On the way down, you had PSUs, particularly oil and gas-related names. ONGC was under pressure. Brent crude prices have come down to levels of $70 per barrel, and Reliance Industries has been struggling for the last 2 days. In 2 days, Reliance Industries has lost nearly about 4%. So that was a bit of an overhang. But let's tell you what we have for you in store today on our show. We start with the top movers and shakers with Vivek. Stocks on our radar include Angel One as it revises the brokerage charges. NALCO soars on Kotak's bullish note. Gold financiers are under RBI's lens for irregularities in lending. We'll get you the details. And finally, we'll tell you the big events to watch out for tomorrow and for Thursday. Let's get to the first segment of the day then. Vivek is now joining in. He's at the big wall with the top movers and shakers of the day. Vivek.
Well, thank you so much for that. Another day where, the market spread was quite good. Now, quite a lot of stocks on the radar, individual stocks that made the big moves. First on our list has to be Tech Mahindra. Big TLSA upgrade coming in over there. Stock ended higher by over 3%. The second stock and the one that did quite well throughout the trading session was National Aluminium, that is NALCO. Almost 6.5% higher, a double upgrade coming in from Kotak from a sell to an add rating. Alumina supply tightness is what they're seeing, and the back of that, over 6.5% higher on very good volumes. The other stock on the radar was PB Fintech Policy Bazaar. Remember yesterday the management was on our channel and they went ahead and clarified as far as the capital allocation was concerned. Today, a very sharp recovery, almost 6.5% higher as far as PB Fintech was concerned. Like you mentioned, some of the other stocks related to the exchange, K Fintech was another name, in the broader end of the universe. The top gainer as far as the NSE 500 was concerned, over 11% today. But quite a few stocks on the downside as well. First on the radar, has to be, one from the gold financier pack. While all of them did see some selling pressure, Muthoot Finance ended low by almost 4%. In the last hour, you actually saw quite a bit of accelerated selling pressure over there. IndusInd Bank today, no fresh news flow over there, but ended as the top laggard as far as the Nifty 50 index was concerned. Jubilant Foodworks today seeing a bit of profit booking after the recent rally, almost 3% lower today. And Bharat Dynamics, select PSU defense names, especially continue to see selling pressure, the top laggard as far as the mid-cap index was concerned.
All right. Thanks very much for that, Vivek. Appreciate it. That's a quick snapshot view of what moved up and down. Jai Bala is with us of Catch the Chaos. Mayuresh, Joshi of William O'Neill is also with us. Mayuresh, quick word on the big sector, which is, of course, IT services. And Rima will shed more light on this in just a bit. Is there anything to do here before earnings kick off, in your opinion? Do you think, much ado about nothing? Stocks are moving on a day-to-day basis. Yesterday, the index was down about 0.7, 0.8. Today, 1% plus higher. But just a lot of flipping and flopping around. But to what end?
Afternoon, Prashant. I think to a large extent, the market is of the belief that with the Fed rate cuts, the expectations in core segments that the IT sector caters to, BFSI, retail, manufacturing, and the consumer discretionary patterns which get determined in Q3 should start showing signs of revival. And therefore, I think the order flows and order wins should be far more consistent as we head into the second half in key niche areas like cloud, AI, generative AI. Europe is also recovering to a large extent, and a lot of management commentaries, specifically the mid-cap IT companies, are pointing to stable growth in terms of revenue numbers, stable growth in terms of margins as well. And pricing does not seem to be an issue at this juncture. Obviously, I think price action valuations for both mid-cap and large-cap IT companies are way ahead of the standard deviation of the past few years. However, I think a few mid-cap companies that consistently grow persistent and propose is something to be held on. Datamatics, Prashant, is one stock that we are keeping on our radar. Our belief is that if numbers come out in a far more consistent fashion, this stock can be one where earnings can actually show a positive surprise move on the upside.
Okay, Datamatics is one you're watching out for in the IT pack. Year to date, stock is down close to about 15%. And in the last 1 year, it's not done too much, but earnings is going to be crucial here. But let's talk about Angel One. Stock closed up with a gain of about 2.5%, but at the session high, Angel One was up more than 8%. This is after the brokerage charges for cash and equity transactions have been revised effective today. Hi, Vamakshi joins us for more. Vamakshi?
Well, absolutely, Rima. Angel One was in focus today after the revision for its brokerage charges came through, and this is in response to NSE as well as BSE revising the transaction charges structure from true to label, from slab-wise to true to label. Angel One is now going to charge around 20 rupees or 0.1% plus GST, whichever is lower per executed order. The minimum brokerage is expected to be at rupees 2. In fact, before this, there was no such brokerage on cash delivery transactions, and Angel One was in fact offering the lowest brokerage rates and lower other charges as compared to other discount brokers. Now, of course, on account of this shift, Angel One expected the revenues to be impacted by around 8%. The company had told us back in July, and this hike in the brokerage rate that has now come through could be a measure to mitigate that impact. So, positive move out there, but it is important to watch out for the kind of volumes that will now come through given the higher brokerages. So overall, given those factors, Angel One was surging in trade. It reached that high, but then cooled down towards the end of the trading session.
Thank you very much for that. The sector of the day was IT, the Nifty IT index ending with a gain of more than 1%. So CLSA says, and they're negative on IT, they believe the stocks have run ahead of fundamentals. The key reason is the Nifty IT index is up 14% in Q2, in the June to September period, but there haven't been any kind of EPS upgrades to, back up this kind of stock price action. So expectations have run beyond fundamentals after the recent rally. They do not see a broad pickup in discretionary demand even after the US interest rate cuts or the cut in the US 10-year bond yields. There is still some macro uncertainty surrounding US elections and geopolitics. Morgan Stanley, just purely when it comes to Q2 numbers and what they expect, they're saying Q2 revenue growth will be similar or slightly better than Q1. In terms of growth rates, the BFS, banking financial sector recovery, continues even in the current quarter. Near-term management commentary remains cautious. They say there is a lot of pushback for, when it comes to investors investing in Indian IT, because they say the stocks have already run up over the last 3 months. Investor positioning is overweight. Valuations are on the higher side. But according to Morgan Stanley, higher valuations could hold up in the early stages of a recovery cycle that we're currently in. So a bit of a bullish and bearish view coming in ahead of the earnings season. It starts next Thursday on 10th of October with TCS. Jay, anything in the first comment on the kind of IT rally that we've seen over the last 3 months, though it's paused now, and individual stocks, anything that you like?
No, actually, IT for me is an avoid, and I've been liking mid-cap IT more than the frontline IT for some time now. And the fact that IT index is coming off from 44,000, very near to 44,000, I've been projecting that as a resistance. And it's now cooling off from there and sort of meandering. And if the IT index were to close below 41,000, that'll be a big, big warning sign that it could be a significant top, a top that could take the markets first to 31,000, maybe even 23,000. So watch out for it. So IT index, along with TCS, is to be watched. We don't want to see TCS close below 4,100. That will be an important signal. But right now, it's just, struggling at key resistance. But there is no trend reversal at the moment. Watch 41,000 on a closing basis as an important support.
All right, let's talk about metals now. NALCO was up 7% today. The question is it a one-day hit or is something turning? Kotak believes, well, things are turning. Nigel is here to tell us why. Nigel.
Well, that's right. NALCO was fueled up in today's trading session by Kotak that turned their stance on it. Earlier, they had a sell call. Now they have a buy rating. Well, and they've increased their target price from around 160 to around 235. They've tweaked a couple of estimates out there. So on the EBITDA front, they've reworked it upwards for the next few years. And on the multiple front, they've increased it from around 5.5 times to around 7 times. And 4 big factors is what they have highlighted: pricing, cost, and volume growth. On pricing, they have upgraded their estimates both for alumina as well as aluminium for the coming years. They've also highlighted the supply-demand dynamics that are playing out in the alumina space. And that's why, because in a tight alumina market, prices will remain strong out there. So that's on pricing. On the cost front, they're getting a lot of their coal from captive sources. And because of that, in fact, the cost will come down lower. In the last year, we saw some impact. This year, we'll see. And going ahead as well, the cost of coal will fall down because they're getting their coal from captive sources. And point number 3 is the street has always been concerned. Where's the volume growth going to come from? They've announced this expansion of the alumina refinery, but now Kotak has started penciling those numbers in. They're expecting it to start delivering volumes in the second half of FY27. So Kotak turning their stance, the bulls turning to NALCO in today's session. Back to you guys.
All right, Nigel, thank you very much for that. In metals, Jai, anything you like?
Last week we spoke about Hindalco, liking the Hindalco, and it's gone to fresh 52-week highs. NALCO has got quite a good potential to challenge the all-time high at about 280 and change. And the short-term momentum is extremely strong. And I think at least there is a sequence of one more higher higher low to come through. So whether or not that takes it to 280 and change remains to be seen. But at least it's got one more high to come through. The nearest resistance is about 234, and the next resistance comes at about 280.
Okay, all right. I want to get your thoughts on oil marketing companies as well, but just in a bit, we're talking about the other commodity, which is gold, but not so much about what gold is doing. The RBI has spotted deficiencies in adherence to prudential norms and in business practices of several gold loan providers. Abhishek is here. Manappuram, Muthoot both fell today. Abhishek, tell us more.
Well, to begin with, RBI has found deficiencies in selected supervised entities. Those are the gold financiers especially. So comprehensive review has been advised for all. On review and on-site examination of selected, supervisory entities, RBI has found that there is, prudential guidelines and practices which are being missed by lenders. So RBI has pointed out several irregular practices that are being, held by these entities. Some of them them are shortcomings in use of third-party sourcing and appraisal of loans, valuation of gold without the presence of customer, inadequate due diligence and lack of end-use monitoring with respect to where the money is being used by the customer, lack of transparency during auctioning of gold ornaments and jewelry on default of customer. There is also weakness in monitoring the LTV, that is loan to value ratio, which is typically in the range of 65 to 75% for most of these lenders, and incorrect application of risk weights, etc. details that have been given by lenders to RBI. So Citi has written a note wherein they have mentioned the gold loan share as a proportionate of the total overall book size of the firm. Amongst banks, Federal Bank has about 12.2%, Bank of Baroda at about 4.6%, RBL Bank and SBI about 3.5 to 3.8%. With respect to NBFCs, Muthoot Finance has the highest share, 82.5% of their loans form gold loans, Manappuram about 52.5%, IFL Finance more than 21% and SBFC around 16%. Back to you.
Thank you very much for that. And in that, it's only IFL Finance stock price which closed up in the green with a gain of nearly 1%. Remember, after a 6-month period when RBI had banned IFL Finance from dealing with gold loans, it was lifted recently. So the expectation is that perhaps it's now all clear. They've gone through all their processes. It's been vetted by RBI, and therefore they can go ahead and things should be fine compared to the rest of the pack. But Mayuresh, in these gold financiers, banks which are involved in this particular sector, is it's a fast-growing space. Which one do you like?
Yeah, so I think Federal Bank has done a decent job. Obviously, I think as a percentage of gold loans, it's significantly higher at 12%, as Abhishek pointed out, compared to the rest of the pack. But again, I think the expectation that are getting largely laid out in terms of advances growth, the management is quite sanguine in terms of a decent advances growth coming through. The biggest advantage, Rima, that Federal Bank gets when the entire system is grappling with the deposit growth is the remittances, which form a decent chunk in terms of their inflows at a very, very low and a marginal cost. So to that extent, maybe a sentimental impact on how the bank might behave with the RBI norms or directives being pushed through. But overall, I think from an earnings perspective and EPS-RS rating as we see it in markets within India, I think the bank is poised for decent earnings growth over the next few years.
Okay. Thank you very much, Mayuresh and Jeff, for joining in. We need to slip into a very short break. On the other side, we'll come back and tell you all about the big events to watch.
Welcome back. You're with us here on Markets Forward. Let's get you a quick sampling of the views that we got through the course of the day on the channel. We'll start with the auto space. Mahindra & Mahindra's farm equipment and tractor business head was with us. They told us there is a strong momentum in the tractor market as sales, even in the inauspicious Shraddh period, are up 10 to 15% as compared to the Shraddh period last year. The company is maintaining volume growth guidance of 5%, which they've held on to, although they've said there's upside risk, but they've refused to change it upwards, at least today. On exports, they're a bit more cautious. They're saying, well, exports over the next 3 to 4 months perhaps would be in the slow lane.
Bajaj Auto expects a 6 to 8% underlying growth for motorcycles. They also expect to carry the EV momentum forward in the month of October. The management told CNBC-TV18 that Nigeria and other export markets are seeing a steady improvement and they expect about a 10% growth in October. They also added that their green energy portfolio, which is basically EV plus CNG, is now 40% of their domestic revenue.
Well, from autos to real estate, we have the management of Max Estates join us as well. The company told us that they are expecting total pre-sales in FY25, that is this financial year, of between 5,500 to 5,600 crore rupees. Remember, this number in FY24 was about 1,800 crores, so that's a big jump. Annuity portfolio on the commercial assets in the next 3 to 5 years should be between 450 to 500 crore rupees. This compares to the figure of about 125 crores last year. They also added that they're developing about 10 million square feet across commercial and residential portfolio, which is yet to be launched, but which is under construction. Okay, well, some more views. This is a CNBC-TV18 exclusive. Managing Director and CEO of Kotak Mahindra Bank, Ashok Vaswani, said that they were engaging with the RBI almost every week in an effort to lift restrictions. They reiterated that slowing deposit rates are not a cause for worry. Mr. Vaswani also added that the bank aimed to take the business to the leadership position in the next 5 years. Listen in.
India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress. Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5, right? Growth and transforming for scale is exactly what this mandate is about.
That's the aspiration and ambition laid out. But before we wrap this show, we'll bring you some of the key market events to watch out for. Vamakshi joins in. Vamakshi.
Well, Reema, we're all excited. It's a holiday tomorrow, but there's lots to watch out on the global front. As far as the US markets are concerned, we will be watching out for the US crude oil inventories. On October 3rd, we will be keeping an eye out on US initial jobless claims as well as the services PMI data. But apart from that, lots of stocks to watch out for as well. Lots of board meetings scheduled on October 3rd. JTL Industries will be considering a stock split as well as bonus issue. Bajaj Steel will be considering a bonus issue. Spandana Spurti, the board will be meeting in order to consider issuance of NCDs on private placement basis. Reflex Industries will be considering fundraising plans, and Reliance Power will also be in focus, and that is because they will be considering a stake sale for raising of funds. Lastly, keep an eye out on Google's event, that is Google for India 2024, that is taking place on October 3rd.
All right, Vamakshi, thank you very much for that. So that's essentially what to watch out for as we come back day after tomorrow. Enjoy your holiday. It's a wrap on this edition of Markets Forward. But news and updates will continue here after a quick commercial break. Stay with us.